Hey, guys. Good morning, good evening, good afternoon. Welcome to everybody from Dubai to Des Moines. Everybody is welcome to come and trade with us at the Trading Battle, a place where we trade with seasoned traders, real live markets, real live money. All of it goes to charity. I'm Boris Schlossberg. Welcome, everybody. Hi. So glad to have you. Today, a very, very special trading battle. We have a father-son trading battle. Gary Fichardt and Cameron Fichardt going to go toe-to-toe. We'll see the battle of the generations. We'll see if the old man can stave off the young bull. It should be a lot of fun. There he goes. He's ready. He is ready. We got them separated in their own respective places to make sure that there's no cheating going on. And great to have you guys. Hi, everybody. Everybody, welcome to the trading battle. Hi, Gary.
Thank you, Boris. Appreciate it. Good to be here. It's going to be a lot of fun. A lot of things we're going to talk about that I think it's going to be exciting to be part of. So yeah, definitely everyone grab a pen and paper. Sit back, grab a popcorn. It's going to be an awesome morning.
Now, yep. Gary, you are a very seasoned trader. You've been around the block almost as I think as long as I have been. Tell us a little bit about your career. You traded with banks, and then you traded your own money. Give us just sort of a little background of how you fell down the rabbit hole of trading.
Yeah, I actually started I owned a brokerage company originally, so I got involved in the financial market at an early stage, and then started investing with the different types of traders, and eventually I decided that I want to get more involved in it. Sat down with a couple of bank traders, got the little feel of what the market offered, and when I saw the opportunity, I just realized that this was for me. I sold my brokerage company and got into trading, lost everything I had in about 2 months. And then I realized that I'm going to have to get myself educated. So it was a bumpy start for me. And that's the reason for Traders Network Club, because we want to make sure that traders get a good start to their trading career and not have the sort of ups and downs that we had at the beginning stages of our trading. So that's the reason why we do what we do.
What made you go on after you lost your money? A lot of people, when they kind of get blown out of the market, they're so dejected that they never come back to it. What made you want to come back?
You know what? I think it was a case of this is all I have to do. I'd left. I was in a construction business before. I had the brokerage company, and then I left. Then after selling everything in the brokerage company, this was it. This is all I had left. I couldn't really go back because it takes so long to build up a brokerage company. I just didn't have the time. So I said, this is it. This has got to work. But I'll tell you this much, Boris. It was 3 days. Caught up in a non-farm payroll on the wrong side of the trade. I didn't know anything about news. I didn't know anything about non-farm payroll. And I just kept on holding. I didn't know, how to re-enter the market, how to level in on the market. So I bought in maximum positions at the bottom of the turn. And it was 3 days of just watching it day and night. And to be honest with you, it was such an emotional ride. I mean, I broke down in tears, literally tears. My wife came in and she's like, "What the heck happened?" I said, "I just blew up everything we had made over the last 5 years," and so we lost everything. We lost our houses, cars. I mean, we were in good shape. And we had to start all over again.
How did you find the strength to come back? Is it just there was no choice? You just had to go on.
You know what? It's behind every good man, every successful man is a woman, and not everyone agrees on that, but I do. Right. So that was my strength right there, and of course, God.
Wow, wonderful! Wow, that's what a great story. What currency pair killed you? Was it the pound?
Oh yeah, pound US dollar. That's the one. We have other names for it. We have.
I did not even need to know what the story was to know who the protagonist of that story was. There is no currency pair that will kill you harder, faster, and more viciously than the Great Britain pound when you're on the wrong side of it. Yeah. That's funny.
Yeah. We have names for the pound, and we all know those names.
None of them are family friendly, I'm sure.
Yes.
Exactly. Hey, Cameron, how are you, my friend?
Hey, Boris, I'm doing great, man.
Good. So, were you able to escape your father's fate? Did he teach you better to not get blown out on your first try?
Well, just like he explained all the mistakes he made and learned from those mistakes, he taught me to not make those same mistakes. So, yeah.
So have you ever blown an account or?
No, I haven't gone that far yet. No, he taught me proper risk management, and I've stuck
And,
to.
and, and and you actually listened to your dad. You didn't contravene him like every other, like including my own son, like every other young man, and try to say, I know better. I know better. You actually listened to him.
I listen to him on specific things, especially things that he knows a lot more than me. He's been trained for over 30 years. So yeah, I took his word pretty serious.
Very good. Very
Yeah.
good. What do you sort of like prefer to trade? What is your favorite?
So 4 years ago is when I got started into trading, and I started off trading cryptos. And we all can remember that year, COVID year, right? Trading cryptos.
Yes.
And then he introduced me to the Forex market. And that's where I've been trading now for 4 years. I just mentioned to you recently that I've been trading some futures as well on the side.
Yeah.
But mostly my whole trading career has been mostly just Forex so far.
Interesting. How you said there's this particular methodology you like to use in analyzing forex. It's called the inner circle trader. Could you tell us a little bit about what this methodology is all about? What does it do? And then
Yeah.
later on you'll show us on the charts. But I'm just generally.
Yeah. And it'd be a lot easier to show you on the charts than me explaining it. It's just it's a technique, a model of trading called ICT, an inner trading circle, and you're just using liquidity, fair value gaps, displacement, all these specific concepts to use technical analysis in the market.
Now, I'm a little bit familiar with an inner circle trader. My question to you is, isn't it very, very subjective? In other words, what I mean by that is it's more of an art than a science. You kind of have to become truly immersed in it to see the nuances of price action, because one person, it's sort of like I think like patterns. One person sees one pattern. A double top is a consolidation pattern for another person. I wonder if you feel that way about that as well.
Yeah, I mean, I don't necessarily look at the market and use retail, patterns to trade. I'm not really a pattern trader. But ICT helps me really understand what price is doing, where the money's going, where liquidity is. There's specific things that I look for to know what moves price, and I'll go over that as we dive in more into the trading. But that's specifically what I'm looking for is what is moving price.
Right. But would it be fair to say that ICT offers you a framework, but it's really your own ability to read price action, interpret price action, that makes a difference between winning and
Yes,
losing?
no, absolutely. I mean, it takes day in, day out to sit on the charts and really understand structure and really build off those habits, good habits.
I think that's an element a lot of beginning traders miss, that it doesn't matter what methodology you use. It's never mechanical. It's always a framework from which you have to use a tremendous amount of personal experience and personal analytics to kind of really refine it to what works for you. Would you agree with that, Gary? Is that there is there's an element of interpretation that can only come with experience?
Correct. Yes. Yep. Absolutely. You hit it on the nail there. But like I'm a big Elliott wave trader, and if you think about Elliott wave, you talk about subjective. There's a lot of subjectiveness.
I'm sorry. My favorite joke, and I apologize in front of you for everybody who's an Elliottician, is that what's the Elliottician's favorite tool? What do you think it is?
No, I'm not sure.
It's the eraser.
Yeah, that's funny. That is funny, but it's true. It's true. I actually, believe it or not, back in around about 2001, I started getting involved in Elliott wave. It's just so confusing. I just moved away from it. It just confused me even more. Then in 2012, I got back into the game. And I actually developed a strategy around Elliott wave. I call it the wave count instead of Elliott wave, because it's not Elliott wave, and it's my own sort of like adjustment to Elliott wave. So I use the principles, but I apply it differently in the market, and I use it just like Cameron does to just sort of understand where the money flow is going. All right, where our support and resistance levels are, and where we can see turning points. And based on that, that's been very effective in my trading based on what I'm using. So I think there's all these patterns and these different types of strategies that you use in that. It really comes down to how you see the usefulness in that pattern.
Right.
And then what you got to do is, like you said, with a bit of experience, take your experience and combine it with that, and then you start developing your own sort of way of trading. I don't think everyone should be the same sort of trader. I think everyone
Right.
should be unique in some way with a different touch of something else. I've
Yeah.
done Elliott Wave, I've done Fibonacci, I've studied all of that stuff. I've studied patterns, I've studied candlestick. I know everything about technical analysis. But do I use everything? No, I do use bits and pieces, and I combined it into something that's unique for me.
Yeah,
That's
I
important.
sometimes feel that trading is very similar to learning a foreign language, right? When you first start out, it just all looks like gibberish to you, and sometimes it takes a very, very long time before you, especially if you
Sure.
kind of learn a foreign language deeply. Let's say you're an immigrant like me and you learn English. I always say that you're really not an American until you begin to understand baseball. That's sort of like, I think, the dividing line between being an immigrant and an American. And the point is that once you get into a subject matter so deeply that all of a sudden those patterns begin to make sense to you, you begin to actually see the Elliott wave count, or even simple patterns that I trade that like for a long time eluded me. That's when you kind of make that transition from being an amateur trader to much more of a professional. But that's what it takes. It takes a lot of just pure experience and I guess a lot of mistakes, right?
Absolutely,
Yeah,
absolutely. No,
learn that.
it's true, and that's where I always say to a lot of traders, that don't go in wild with equity management in the beginning stages of your trading, because that's where you're going to land up where I did, and on your knees crying and praying that you get out of where you're at.
Yeah,
Start off very low, start off small, because it's you have to build up experience to understand this market, understand the patterns of the market, and then actually feel the heartbeat of the market
right,
before you really can start becoming a
right,
little bit more aggressive in the market. So
right.
always start off very, very slow.
I agree. I agree. Cameron, would you say that um, strategy or risk control matters more in trading?
Oh, absolutely. Risk control. That's definitely the first thing that's on top of your trading when it comes to your trading strategies. You want to have proper risk management. So
Right.
that's definitely the first thing that you need to focus on, is having your proper risk management.
Okay. Well, speaking of risk management and strategy, our first trading challenge of the day is coming up. The big event of the day today is Canadian CPI, Canadian economy. I'm actually sort of curious. Gary, do you have any comment on the Canadian economy recently? It's certainly not doing as well as the American economy. Canadian unemployment is around 6.3%. American unemployment is 3.7%. There's a lot of housing issues in the country. How's your read generally on Canada as an economy?
Yeah, so you're right. The data is not all there, but still the biggest problem is inflation. And so with oil prices pushing higher, it is
Yeah.
helping the Canadians quite tremendously. Anything over $72 a barrel is still good profit for the country producing oil.
Well, sorry,
And
what's the
so
what's the break even? What's the even break even price at 72?
I believe it's $72 a barrel.
Yeah.
$72 a barrel. So anything above that, Canadians
Yeah.
are in the money. And so that helps with obviously GDP. That's the problem we have here in the US with the strong dollar. We're going to struggle to settle our debt if we're
Right.
not going to grow our GDP. And so we need to have a stable dollar, not a very strong one, not a very weak one, in order to
Right.
be able to get outside currency coming in. The same thing with the Canadians. So I think with the report coming out today, I think we're going to see a higher number in inflation, or at least I think the market's going to react based on possible rate hikes. I don't think rate cuts are even on the table. I know the US has spoken about taking rate cuts off the table for the rest of the year. But it's the Canadians that I think we're going to see a little upside move. And the reason why I'm pushing for an upside move in the Canadian dollar itself because of inflation is because the technicals, I believe the technicals are all lined up. Now, Cameron might come up with a currency pair that's going to trade against what I'm saying, which is fine, which is just part of the balance, the battle. But the thing is right here, I already believe that we're hitting that top for the Canadian dollar, which means that we're probably going to see some upside move in the Canadian dollar itself, where we're going to see some downside move in like US dollar CAD. So
Okay. Well, why don't you take us to your charts
sure.
and show us what you think would be the best trade to position ourselves before the event.
Okay.
Let's take a look and see what's on your plate.
So I like that idea because it's like we don't know what's going to go on, right? We don't know what's
Right.
what's going to happen today. So if I go to and you know what, let me flip over to the US dollar CAD right now and just go to the chart right here, and let's look at just the daily time frame. And so what we see here on the daily time frame is we see that the market's tied up in this big consolidation level. And this consolidation level is right up here at the top, right down here at the bottom. Now, if I go to a weekly time frame, you'll actually see these are larger range, which means that if we break through this area right here, we could go even further down south. And so I don't think there's enough to be able to push through this resistance. There's a little bit of room still for the market to pump up a little bit higher, but I think it's going to get to a point where it's going to come back to retest this breakout point, maybe go up a little higher, and then continue to work its way back down towards the support. So I think the US dollar CAD is sitting at a top. Now, this could either be US weakness that's going to come into play, or this could be the Canadian dollar that's actually strengthening. So I'm going to lean more because of the news out today that CPI is going to come out good for the or higher for the Canadians, and we're going to start seeing a downside move or something turn around. Now, the one thing that we have to understand is that fundamentals don't necessarily always move right on the day. Sometimes we have a few hours of sort of like whippy-lashy type of movement, but then eventually it's going to take its sort of run over the next couple of days as dust starts settling down. So my first trade today is going to be on US dollar CAD, and I'm going to actually sell over here. Now, normally what we do, Boris, just so you know our strategy, and this is the thing that I talked about, I've been teaching Cameron. There's two ways to manage your risk. Either we get in here and we put our stop losses above this area right here to protect your position, or we level in. We use a cost averaging to level in. So which means that your risk is going to be a little different, right? You're not going to be putting in all your margin into one position. So let's say you're risking, let's say 1 or 2% on a trade. Obviously, that's very aggressive. But if we're trading 1 or 2% on a trade, you don't want to put in everything if you cost averaging. I can't put 2%, 2%, 2%, 2%.
Sure.
Because I'm going to be running out of money very quickly.
It's no longer a 2% trade. It's an 8% trade.
Right. Precisely. Right. Because now you're not really holding any stop losses because you're managing risk based on your cost average. So I've got to cost averaging at a good rate in order to be able to, eat an elephant very slowly. All right. Or either get chopped up. So the thing is this.
I was going to say, is there a particular, do you simply do it in quarters, or is there a particular parabolic formula that you follow? For example, a third, quarter or a half. Are the ratios all the same, or do you have sort of a specific ratio?
We have different ratios, depending on, of course, volatility, trend, and momentum. So there might be different ratios, but also there's another way. There's a couple of ways to trade it. Another way would be like, if we are trading a wave structure, then we know that this wave right here has completed itself. So this is a good selling point because now we're looking for correction. So you could sell over here, and if the market does a short dip and then a continuation, then the next selling point would be up here at the next wave target. So you could trade sections based on wave structure, or you can go ahead and say, I'm gonna grid this position at a certain levels of the upward move. So it all depends.
This is a daily chart on a typical, obviously we're trading short term here, but on a if you were to structure this, how wide a zone do you give yourself in terms of risk? And are you using daily charts for entries, or are you using more shorter term time frames?
So the daily time frame gives me structure as to where the money's at and where we're seeing strong resistance. Now, if I was going to add on to a winning position, then I'll go down to a 1 hour time frame once we start seeing the market moving in that direction. So right now, what I'm trying to look for is, which the 1 hour doesn't time frame. The 1 hour time frame doesn't give me. The 1 hour time frame doesn't give me where the major resistance is at. Now, the 1 hour time frame does lead to tell me where the turning points could possibly be when we start seeing some, reversal patterns appearing on the 1 hour time frame. Then we can go back to the day and say, all right, we got that strong resistance. And with a 1 hour, let's say, King's Crown or head and shoulders pattern sitting over here, or even double tops, as you mentioned early on, that would be a reversal point that we could see the market turning at. So I want to initially get in, and I'm a very aggressive trader. That's one thing I taught Cameron, is that get in aggressively, but manage your risk conservatively. And so right here would be, of course, my selling zone. This is where I sell.
Right.
So with that being said, because we're entering just with one position, I know we're not putting multiple positions in. Because we're entering on one position, I'm going to sell right here, but I'm going to put a stop loss above this area. Now, me and Cameron came to a compromise as a battle, but we have sort of a compromise. You said that we're only going to risk 5% because we're trading 5 currency pairs.
Right.
Sorry, 3. We're trading 3 currency pairs or 3 trades. We said we're going to risk 5% on each 3, so total 15% risk on the 3 trades. So what we're going to do is we're going to place stop losses with a 5% risk, give or take a few. We're not going to exactly be on the number, but so what I'm going to do here is, Boris, I'm going to sell this one right here, and I'm looking to place my stop loss. If I look over here, my stop loss would have to be above probably 198. So I'm looking at almost a 100 pip stop loss. So because of that, let me just go in with 0.5 lot sizes, and I'm going to go ahead and put a stop loss in, and I'm going to put that stop loss 100 pips away, and I'm going to take profit on this. I'm going to go ahead and take 100 pip profit on this too, and that's because I think we have to close out before Tuesday next week. I believe that's what it is. Okay, so normally you'd go for a higher risk reward ratio, but because of the sort of the pattern we have right now, I'm going to go ahead and risk a little bit more here. Now it looks like it's got a 3% risk right here, so I can actually add in more. But go here. Let's see. There we go. That's about 5%, 0.7.
I love how you trade. Almost everybody else on the show is always so cautious. I love the fact that you just size up.
But there's no sizing down here. All right, so I'm going to go ahead and sell on that. My stop loss is going to be there. I'm risking exactly a 5% risk on that trade. I'm just going to let it ride and see what happens.
Super. By the way, the expression "King's Crown," I've never heard that before. As far as patterns go, that is the most British Empire expression I've ever heard in my life. It's very funny.
It was actually King's Crown originated. Started really with Jared Martinez. He was sort of one of the founders of the King's Crown. Yeah.
Oh, it's very cool. Very cool. So Cameron, my friend, what do you have up your sleeve? Which Canadian cross are you going for? And how is your analysis? Are you also bullish CAD, or are you on the opposite side of that trade today?
I'm not getting too into the fundamentals right now. So just looking at the technical side here, I was looking at the Euro CAD and looking at the 4-hour, we can see that first thing is, just like I explained with ICTs, is what causes the price to move, right? Well, first thing is we generate liquidity. Second is we hunt liquidity. And third, we rebalance insufficiency. And the fourth thing is we rebalance equilibrium. So looking at the 4-hour here, we had this downside move. We can anticipate that we expected that price was going to retrace. We had a relative equal highs, which we know that there is some liquidity at these highs, right? We know there's some money in the market over here that price wants to come up and sweep this area we call buy side liquidity. We saw that this previous high, we got retracement back to our 6.2, rejection, a lot of displacement to the upside, showing that, okay, we got a rebalance of equilibrium. And if no one knows what that means, a rebalance of equilibrium is just this price leg from this low to this high. We had a rebalance to discount, which is at 50%. That's what we expect, a rebalance of supply and demand, right? If there's a lot of demand, market's going to rebalance to go ahead and hit discount.
Basically a retrace, right? Retrace of the price.
Yes. So we're looking for a rebalance of equilibrium, which we got. Price hit our 6.2, got rejection. We see displacement. So we see a lot of demand. Price came up, did not take out this high. So we have relative equal highs. Price retraced again. So looking back now, we say, okay, we know that the draw of liquidity is higher. We're not only seeing price reject off that 50% area, but we also see here, looking at the 4-hour, let me zoom in a little bit. You can also see here as well, we have a fair value gap, a 4-hour fair value gap, a bearish.
Can you imagine that I know nothing about what a fair value gap is? Can you explain what that is? Because I always hear that expression.
Yeah, this is just an imbalance right now. So we call it, just like I said, one of the things the market moves is to rebalance insufficiency.
Where's the gap actually? Is it that the blue and the yellow line? Is that the gap?
So right here, you can see that we have from this low, this candle wick, to this high, this candle wick. This area right here is an imbalance where we expect insufficiency in the market, where price wants to come back to refill this area that
Okay.
that has insufficiency. So
Okay.
so not only that, it's a bearish fair
Right.
value gap, because you can see it's a bearish candle.
Right.
So not only that, is what we expect is when price retrace, we wanted to see if it respected this area, right? And we saw displacement to the upside. So we know that the draw of liquidity is higher. Now, this became an inverse fair value gap, meaning that price came back down, just like support, right? When price breaks above support or resistance, price breaks above resistance, and it comes back down to retest that area, we now it's previous support, right? So just like a fair value gap, we call this an inverse fair value gap. Price came back down, showed respect, and now showing more displacement to the upside. So we know that the draw of liquidity is higher.
Interesting, right?
We're
So
going
when you're saying draw liquidity is higher, it's basically what you're saying is the direction is likely to go up rather than down.
I'm expecting that price is looking to go ahead and move bullish because there's liquidity above these highs where the retail sellers coming in and send stop losses. We know that there's orders above these highs that price wants to come and take out these orders to accumulate more liquidity. So looking at the 4-hour structure, that's why I'm seeing the 4-hour structure. So going to the 1 hour, I'm seeing that we're starting to see a market structure shift. Now, this hasn't been validated yet. So obviously, with the sake of the show, I can't sit here all day looking for the most perfect setup, but we can see that we want to see displacement, right, above this 1 hour high, this previous 1 hour high. That's indicating that, all right, if we see displacement, we know that the draw is higher, and we're seeing now a market structure shift here on the 1 hour. And that's going to give me more confluence to go bullish on the Euro CAD. Right now, we're not seeing that setup. Right now, as you can see, we're starting to see a little bit of rejection. Nothing's been validated yet. But just from the sake of the show, I'm going to go with expectation that I'm going to expect a bullish run here. So I already implemented this trade as Gary was talking. So we are going long on this Euro CAD, and that's because I see the respect of this fair value gap. You can see it's respecting. You can see displacement from this area, and it's an inverse fair value gap that gives me a little bit more confluence.
But to be clear, for you to make it a real perfect trade, you really want to see the price action close above that MSS.
Yeah. So to make it a perfect trade, what I like to see is the market structure shift. I like to see displacement. And what displacement means is that you can see a big move, and displacement equals fair value gaps. When you see a displacement move, you're going to have fair value gaps. And what I like to see is a displacement move to the upside, a break of structure, and then a retest to a fair value gap. That's going to be my entry right there.
Now, what happens if you don't get a retest? What if it's a runner? Then you just let it go?
What if it breaks below the fair value gap and continues?
No, I'm saying is what if it just keeps going up?
What if it doesn't retest and continues to keep going? Then you know what? Then my strategy didn't set up. There was not enough confluence for me to get in a trade. Then I look for the next setup.
Okay. So you're always a very kind of a disciplined limit entry.
When you're scalping the market, especially like I just got into futures and scalping futures, you have to be a disciplined trader. That's like the number one thing I talk about is discipline, because if you don't have discipline, you're going to build bad habits. And when you start building bad habits, you're not going to be a consistent trader when it comes to looking for these nice scalps in the market.
You see that, Boris? That's all because I was whipping his ass when he was young and got him in line, got him disciplined right from the beginning.
So the mantra in the Fichardt household is don't chase retrace, right? That's the mantra.
Well, I'm actually more of an aggressive trader than Cameron. Cameron's actually
you are.
Yeah.
You took it all in, and you're like, he's like, yeah, it's gonna come in, it's gonna do this. You're like, no, we're going in.
The thing is, I used to do that. I exactly what Cameron is. Wait for those confirmations, and that now I've just become a little bit more. I'm better at saying, hey, I'll work up on position. I'll work it out if it doesn't work out. All right, I'll work it out. But if and that's why the cost averaging and risk management is important, because you can be in a bad trade and still make money. That's the important thing.
I kind of I think us old men come to that conclusion because we realize that life is never perfect. That good enough is very often the best you're going to get, and the only way that you can manage is to do partial entries. To kind of you're never going to get that. It's rarely you're going to get that perfect entry, but you need to be if you got to be in it to win it. So price coming out. I don't have the chart on my hand, but how did the news come out yet? Is the news?
Yes, the news
Yeah.
is out. It's busy pending right now. Let's take a look here and see. It's pending. All right, so we got already trimmed CPI year on year 3.1%. So down. This is not the number I was hoping for. So we've seen a downside move in the number. So CPI numbers coming out lower across the board. Yeah. So not a number that I was hoping for.
Is EuroCAD going up? Is he doing well? Yes.
Yep. It's going up pretty good. And you've seen that nice move above the market structure shift there. So, yeah, we have a nice break above that candle. So it's moving pretty good right now.
That's very interesting. You know, it's fascinating because honestly, fundamentally, everybody is super bearish euro because they think the European Central Bank is going to cut rates. As you said, Gary, it's, Bank of Canada is probably going to hold rates steady. So it'll be interesting to see how long that trade runs. But very yeah, Lucas says, Cameron, the student beats the teacher. Well, it's a short game, but yes, for now he got it right. He did a good job.
He got it right, but you know what he's done, and this is the thing that I've always taught Cameron, right? And this is where I know you and I can have a long conversation about does technicals lead fundamentals or does fundamentals lead technicals? And so Cameron based his decision on technicals. I did too, and although I said there was still some room at the top side, right? So even though the entry that I entered, I said, hey, there's still room on the top side. We could possibly see the market moving back down, moving back up first before down. And this might still play out for the rest of the week. So we might have a rally, and then the market's going to settle down, and then we're going to see a dip. Cameron based his decisions on technicals, not fundamentals. He said, I'm taking fundamentals of the equation. I'm seeing a technical setup right here, and he stuck to that. And that's the part of being disciplined. Because a lot of times, Boris, when people try and confuse or try and combine technicals and fundamentals, they don't have a good grasp on either one of them, and then they get more confused. And so I'm always saying it's easier to understand technicals than it does fundamentals. So stick to what you know and understand, and that should be your leader. And fundamentals should be a fulfillment of what you see in the technicals.
Or the other way around, which is what my partner always argues for, is that if you have a technical view and it is confirmed, in other words, you're bullish and the data is positive, and then you look at technicals to confirm your fundamental argument. In other words, gold, you're bullish gold because sovereign debt risk, we continue to expand our deficit, so on and so forth. Some piece of news comes out, I don't know, CPI comes out, it's actually lower. It's actually higher, which should be negative gold, but gold goes up. That confirms your general thesis, and you use the technicals to kind of confirm the move. On the other hand, if you're bullish gold, but the technicals do not, technicals show a drop. They just drop. They lose the moving average. That's enough to kind of take you out of the trade, even if you're bullish gold. So it's sort of not. It's basically not fighting the market. It's understanding how you position on the market, and then using the technicals to confirm it, which would be interesting. But anyways, good job on the first challenge, guys. Let's talk a little bit about the charities that you guys are all trading for. Gary, why don't you tell us a little bit about who you're trading for, and then we'll come back to Cameron.
Yeah. So it's Kitty Up. It's actually a farm that they do riding for special needs children, which is fantastic. We've actually become very good friends with the people over the last probably 10 years or so, actually longer than about 15 years. And just the things that they do for the special needs children is just amazing, and the improvement that they have at this we call it the farm.
Is this it's a working farm? Do they have animals, and do they?
In fact, I believe I even have I even have the website open here as well. This is what it is right here. You can see. I think it's better to explain this. So they got. They got camps in that. They got these special needs children that ride these horses.
Wow.
It's amazing
how happy they are.
How excited and happy they are, and the improvements they have when they go through this program. So they have a good program. They have a good sort of special needs.
Yeah, that's amazing.
Summer camps and that, which is great. And they're a very good company. And we're proud to be trading for them.
Wonderful. What a great charity. Okay. What about you, Cameron? Who are you trading for?
Same supporting the same charity as well.
So this is great. These guys, it's like putting on black and red. You cover the board on roulette. Wonderful. That sounds like a great charity. I mean, who Who couldn't like that? That's just wonderful. I'm glad you guys are trading for that. So let's jump in. We have we're kind of running in a little bit on short on time. I wanted to jump in and do our second challenge, which is spin the wheel. And then out of that, I'd love to be able to kind of have you walk us through your methodology, because what the spin the wheel challenge is all about is we're going to just force the contestants to choose an instrument, or it's going to choose an instrument for the contestants. And then the contestant has to choose whether it's a buy or a sell, given their own methodology of analysis. So that's going to be very, very interesting. So I think, who should we start with? I think let's start with Cameron. Let's spin the wheel for Cameron. Let's see what he gets to choose. Let's see how it goes. Your favorite, NASDAQ. Well, you've been scalping NASDAQ, so this should be right up your alley. I'm actually fascinated. I'm actually curious to see what you have to say. I have my own biased point of view on NASDAQ. Let's see if you dovetail with mine. Let's take a look at your charts. You tell me, NASDAQ, buy or sell?
All right, let's take a look. Let's take a look at the 4-hour. All right. Well, first thing is we can see we have had a strong move to the downside here. Okay.
Correct.
We can see the draw of liquidity was taken. So usually when I see the external low, right? These external highs and lows get taken. When we see sell side liquidity get taken like this, usually we can expect some accumulation, not much really going on in the market, or we could just see a quick rebalance of equilibrium because we have a lot of insufficiency in the market right now. So
sorry to interrupt. I'm going to try to translate this into old man technical analysis. So when you say
right,
when the lows get broken, the general pattern is consolidation or a rebound back. You're not looking for continuation basically at this point.
Yes, unless there's some news in the news that's pushing price a lot more. But when we see the external model, when I mean external, I mean the higher time frame lows and highs, right? Not just seeing a 50-minute low get taken or anything like that. When I see a 4-hour low like this, the external low, as you can see, this model right here is what we're looking at right now. This is the model we're looking at. This external low just got swept. And not only that, we see a little bit of consolidation right now. We're seeing a little bit of accumulation. So we're seeing rejection off this area. We didn't see strong displacement, which is going to show that, okay, the draw is lower. So the draw of liquidity is actually lower. No, we didn't see that. We saw a little bit of rejection here as we swept this low. So that's indicating to me that we're either going to see a retracement for a rebalance of equilibrium, where I can go ahead and now go to the 1 hour and say, okay, from this price leg to this low, we can expect price to retrace to our discount, which is 50%. Okay. We can either expect that. Also, we have insufficiency. So we also got a 1 hour fair value gap right here. Okay. So price is going to continue to move in this area as well as it's trading in this fair value gap. So I'm technically what I'm looking for is a buy. I'm buying on the NASDAQ here. We took out this external model. We took out the sell side low. We have a big displacement to the downside. We got rejection, seen a little bit of accumulation. We can expect price now is going to either rebalance equilibrium or rebalance insufficiency before we see more displacement on the NASDAQ. So
super interesting. Huh.
Yeah. So I'm going to go here. And what I'm going to do is I'm going to target discount. So going for a long, I will set my stop loss below these lows. And I'll be targeting, you know what? We'll even go with a tighter stop loss to make it interesting here. Okay. So I'm going to go with about an 86 ticks. So let's go with a buy here, stop loss. And we're going to risk about 5% with a
86 point stop
loss. Yeah. And then we'll take profit about 155.
Now, I'm just curious. I know Gary was mentioning that he's doing sort of 1-to-1. What is your either one of you? What is your typical risk reward ratios that you guys put out on your trades? Do you trade 1-to-1, 1.5-to-1? Where do you find the sweet spot?
I usually look for a I either look for a usually like a 1, 2, 3 is my sweet spot.
Sorry, 1 to 3.
Yeah,
Yeah, 3 to 1. Yeah, 3 to 1
Three
risk
to three
reward.
to one. That's a very, very
yeah.
high ratio.
Yeah.
Wow, wow. How accurate are you at that risk reward ratio?
I mean, it's never given in the market. But obviously they always look to scale in positions as well. But anything from a from a 2 to 1 or a 3 to 1 is specifically what I ideally target.
Okay. Now, when you say when you're scaling into a position, is it 1 to 2 on the whole position, or just 1 to 2 on the partial of that position? Like if you were to average out and get a blended risk reward, I bet it'd be a little bit more compressed than 1 to 3. It's probably more like close to 1.5 to 1 with all the blended positions. Would you
Yeah,
say that?
well, with futures is a little bit different than forex, because you
Sure.
can go ahead and we entered multiple positions. When I trade forex, I enter multiple positions. So I use dollar cost averaging, like Big Dog
Right.
explained there. So with forex, I do use dollar cost averaging with lower lot size to go ahead and manage those positions. So it's a little different with futures than with forex.
Got it. Okay, super. Well, that's interesting. Let's see. It's kind of a very contrarian trade on Nasdaq because everybody's so negative Nasdaq. So it'd be fascinating to see how your price structure analysis comes out at the end of the week. All right, let's spin the wheel for Gary. Let's see what the wheel of fortune comes up for him.
Let it roll, baby.
Let it roll. Our the favorite instrument of the day. You know, my own personal favorite instrument of 2024 is gold, where liquidity is ample. Everybody's starting to speculate. We hit 2,400 on futures. We almost hit 2,450 before backing off. It's 2,500 or bust in my opinion on gold. So I'm sure Gary's sounds like he's a long-term gold bug too. But I wonder how you view it from a trading perspective.
So, I mean, this is interesting because, firstly, number one, like I mentioned, I'm a buy and hold in gold, and the reason why I'm a buy and hold in gold is I think it's a good safe haven to invest your money in and try to get your money out of the dollar. I mean, there's a lot of people running around and doing a lot of other things that are not doing that are not invested in dollar itself, and it's because
Right.
of where the economy is going, where the world economy is going, you got to put something into a little more safe haven. So, but is as a spot trader, if I was going to go ahead and do something today, I would certainly go ahead and take a look at the technicals here, and because it's this is actually a short-term trade because we're going to be in and out of the market by Tuesday next week. So this is not a long-term hold either. So what I have to look at is how the market's set up technically. To understand, I know already that I'm looking for a short on the dollar, and the gold and dollar's been both rallying for the last week in that. So it's really a strange move that we've seen. We've seen no correction move yet. And I mean, if you look at this gold move right here, it's a really powerful move. But everything, what goes up comes down. It's got it. It's just where it comes down. Where's
Right.
that turning point? And so it's important to understand where the turning points are. So the first thing I'm going to do here, Boris, is I'm going to go ahead and just take a look at the consolidation we have right here, and we did have a breakout point. There's going to be a retest of that. There's always, like I said, there's a timing of when it will come back. So if we take a look over here and we go ahead and pull up the FIPS from the bottom right here to the top, I'll notice that the 1.618 is being hit. And so if the 1.618 is being hit and we haven't had a correction move, then I'm going to say that there will be a correction move due. Now, normally, I don't know if you've picked it up as well, but Thursday, Friday trading is normally the corrective move. Wednesday is normally the sort of the decision, or at least the indecision sort of trading week or trading day of the week. But
Right.
it really comes down to Thursday, Friday. Thursday, Friday normally corrects what we saw on Monday, Tuesday, Wednesday. And so I'm going to bank on the fact that we've got this part of the week left, that we're going to see a correction move in gold. And then we're going to see a correction move in silver. And then we're going to see a correction move in silver. And then we're going to see a correction move in silver. And then we're going to see a correction move in silver. And then we're going to see a correction move in silver. And then we're going to see a correction move in silver. And then we're going to see a correction move in silver. And then we're going to see a correction move in silver. And then we're going to see a correction move in silver. And then we're going to see a correction move in silver. And then we're going to see a correction move in silver. And then we're going to see a correction move in silver. And then we're going to see a correction move in silver. And then we're going to see a correction move in silver. And then we're going to see a correction move in silver. And then we're going to see a correction move in silver. And then we're going to see a correction move in silver. And then we're going to see a correction move in silver. And then we're going to see a correction move in silver. And then we're going to see a correction move in silver. And then we're going to see a correction And
Wow.
so I'm going to go ahead and trade against the crowd
Right.
and short gold.
Super interesting. Wow, I never thought. I guess it makes actually perfect sense because people are lightening up ahead of the weekend. They're taking profits. So Thursday, Friday does tend to be if there's a impulse move on the first 3 days. Thursday, Friday is certainly Friday was a corrective move in gold last Friday. We had a 4% high to low distribution on Friday. That was really crazy. It was literally like a one-way move for 100 gold points, which was just insane.
Right. Now this is not key. I'm putting a really tight stop on this. So this is either I'm going to make it or break it on this trade. So I'm putting
Gary,
it stop tight. Well, actually, you know what? Actually, I'm going to go further. I'm going to give myself a little more extra room on this. And then what I'm going to do is I'm actually going to price. I know we're going to close all the positions automatically by Tuesday. So I'm going to go ahead and chase after a little bit more. Now, you did speak about risk rewards. What are my typical risk rewards? Cameron mentioned what his is. We got a certain strategy that we apply. I'm going to probably talk about it a little bit more later, but we got a certain strategy that we apply in the market where I've taught traders, novice traders that don't know anything, don't try hit home runs. All right. Try to get pieces of the market every single day. And I've always said, you'll be amazed how just 20 pips a trade, just 20 pips a trade, net pips, not gross, but 20 pips a trade, how much that can accumulate when you're trading multiple currency pairs. And so you don't have to run after 300, 400 pip runs. 20 pips on each trade is all you need to make a good profit at the end of the month or the end of the year. And so I'm going to let this one ride, though, all the way down to this area right here, about 2085. So it's a big target to the downside. But it's not to say we're going to reach there by Tuesday next week. But I'm just setting myself up so that if the market does get to that point, then hurrah.
Sounds good. Yeah. It's interesting. It sounds, I wonder if both of you are the same way. Certainly Gary strikes me as much more of a turn trader than a continuation trader. What about you, Cameron? Are you more of a turn trader or a continuation trader?
Well, like I said, it all depends on what I see price do. If it shows me displacement, then I expect continuation. If I see rejection, I always wait for price to build structure. Once price builds more structure, it gives me a better idea and more confluence to get in a trade. So it just differs.
So you really come as a blank slate, and you let the price give you a direction.
Yeah. I let price talk.
You taught him well, Gary. You taught him well. No ego in the market.
Well, in fact, if you think about it, there's, we have this conversation a lot, right? About what is the trend on, let's say, the euro US dollar? What is the trend on the euro dollar? Well, it's debatable because what time frame you're looking at. So where someone says you're trading against a trend, it could be, no, I'm not. I'm trading a lower time frame. I'm trading with the trend. That's the trend right now. So there's trends within trends within trends, and sometimes we have the same trend with all the time frames, but then a lot of times we don't. And it's there's a common thing, right? People always say things like you can that the markets consolidate 70% of the time and trend 30% of the time. Again, that's debatable because you could take a consolidated market and trade on a lower time frame, and you got a trend. So there are trends throughout the year.
Wait till you come trading 1 minute chart of NASDAQ with me on my YouTube channel 9:15 today, where the trend will change 5 times in 1 hour, and I'll be trading with it. So yes, I totally agree with you. Very, very much so. Gentlemen, why don't you both tell me a little bit about your business? What is Traders Network? What do you guys do? What kind of a service offering does it provide for traders? Would love to hear it.
Yep, absolutely. Cam, if you don't mind, let me start off. So we started the company up a few years ago, and the company's built on providing support for traders that specifically are not seeing success in the markets. And that's the biggest problem that a lot of the educational companies in the world aren't really providing the support behind the trader, because you have strategies that people get taught, but are we eating the same bread? And which I'm saying is that sometimes you teach a strategy, but then you don't really have a good set track record, number one, on how successful it is. And also a lot of the gurus aren't actually physically trading live or in the market. They just really just talking about the market, right? Now, I'm not saying everyone. I'm just saying there are a lot that don't.
I fully understand that. That's my personal pet peeve. There's nothing prettier and nothing more deceptive than yesterday's pretty chart of how much money you could have made in the past. Trade the future for me.
Absolutely. So what we did is we created a program where traders, we got different types of strategies. We've got different types of ways that you can trade the strategy. Cameron runs a live trading shows where we trade live money, we manage money, we trade live money. So we place live trades. We actually show everything we do. We have signals that they can actually follow our trades as we trade it. We have a third party backed up track record as well. And so everything's transparent. And the one thing that we're excited about doing in this show is that we're actually offering an opportunity for someone to have our services absolutely free, based on the fact there's conditions, and the conditions, of course, open up a live trading account with Eightcap. So we're definitely, and there it is. So it's basically the Dow Remote. This strategy is all about taking the Dow and using risk on, risk off to identify trading opportunities with 16 currency pairs. And so you're going to have 16 trades being implemented every single day at 9:31. And so if they go to our website, Traders Network Club, and they go ahead and they take a look at our our offer, just go to the sponsored pro offers right at the top there.
We also have the description in the video. There'll be a link in the video, so you guys can have that there as well. But yeah. Now I'm just curious. 16. Let's say a person deposits $10,000 with our favorite broker, Eightcap, and you get 16 currency pair signals.
Yeah.
What is your recommended lot allocation per those 16 pairs?
That's important right there, Boris. And we do have a specific risk management for each of them. In fact, I'm busy trading just as an example right here. I'm trading a $3,000 trading account, and we talk about risk management, right? This is a $3,000 trading account. Now I'm trading with a 50-to-1. So we've got this thing. If you're trading with a 50-to-1 leverage like we here in the US, then you need to be able to self-sponsor your own margin, which means if you run out of margin, add more margin. If you're trading with a higher leverage like Eightcap, then you can actually trade with a $3,000 trading account, and you might not need to add more margin to it. But I'm always saying that if you're being aggressive in the trading, have more margin to be able to cover your margin level.
Just to understand, when you say more margin, do you mean have more capital that you're going to add to the account?
Correct. Yes, have more capital available to be able to fund the account to cover your margin levels. Because if you want to say, hey, I want to trade conservative, I don't want to worry about margin, then a $10,000 trading account will be able to get you in with lot sizes that have been separate, self-allocated to different currency pairs. As an example, the euro US dollar has a 2% margin, so which means that we trade with a four micro lots on the euro, so the US dollar CAD, not euro.
So in ratios, is that 0.04 or 0.4?
0.04. So microlots, yeah.
So because you have 16 of those, it really builds up to large risk if you
right. Now the pairs the pairs like the pound US dollar, the pairs that are 5% margin, we trade with 1 microlot. So all the higher sort of volume trading pairs.
It's so interesting. I love how you do this. This is such a simple way of properly sizing your account. Forget ATR, forget evolve, forget trying to figure out what the daily, Bollinger Band spread is. Just simply use, the broker has done all the work for you. The broker has set the margin because they actually understand what the vol is in each currency pair. And if it gets higher, they'll raise the margin. Just simply use the broker's margin as a metric for how you want to allocate to size. It simplifies the process so much better. I love it. I love it.
Absolutely. And by doing that, you can get into 16 currency pairs and not be over leveraged.
Right.
Now, if a guy comes in if a trader's got less than $3,000, then you have to start deciding on which pairs you want to go ahead and trade. Then
Right.
you have to be selective on the pairs. But if
Come
you
on.
do come in with
you're gonna trade with 5,000 or up. Come on, be a big boy. Step up to the game.
Exactly. Now, this offer, by the way, the reason why we got it is free because we're about trying to get people a good start in trading. We want to get them on the right foot, get them educated, get them trading, and try and minimize their costs because the biggest problem with traders today, and we know that back in my day, it's like we'd pay for education. Today, everyone wants everything for free, and they're searching it on the internet, and then what they get secondhand information. And that puts them in the worst position than they were originally. So, and I'm not saying that there's bad education out there, but just realize that free education.
But I love your description of it. It literally is secondhand information.
Yeah,
it is not. It is not curated. It is not thought through, and it's not formally presented because the people who are giving it to you have nothing to lose. They're not trading that information. They're just providing it. So it's about as useful as as a secondhand toothbrush.
Absolutely.
Okay. Cameron, what do you have to say for yourself, young man? Anything else you want to add to your dad's great description?
Yeah. Just like you said. What's that?
Tell them about what you do in your room.
Yeah. I was gonna say. Exactly what Big Dog said. But also I have live sessions daily that goes over these technical analysis that you saw me do today. So we have the live sessions. We have 3 VIP levels. So if you go to our website, you'll find out that we have 3 different VIP levels, and each one has a different tool, different strategy of how we enter the market. So take a look at each VIP level. A lot of them are on the VIP level 1 and the VIP level 2, just like the Dow Remote that Big Dog talked about. That you can find the tool of the Dow Remote in our VIP level 2. So you go on our VIP level 2, you'll get daily sessions of us implementing those trades using that Dow Remote tool. So
sounds good. All right, gentlemen, we are running out of time, and I got to get you to my most famous and popular challenge, which is sabotage your opponent. You're going to pick the single worst trade for your opponent, meaning that you're going to pick a currency and you're going to make them go the way that you think is going to lose them the most money to take off, to basically offset all of those profitable trades they have. So I'm going to start actually with Gary. Gary, what are you going to do to sabotage your son's great P&L that he's just constructed right now? Oh, Gary's mic just went out. We just lost
my
him.
bad. Sorry. I'm going to look at one of the JPY crosses because I think I've always said this, that the JPY cross or any JPY cross is a currency from hell. So I'm going to go with a JPY cross right here, and I'm going to go. Let's go US dollar JPY for now. Let me just see if it's got a good structure here. And
I cannot believe it's 155. What a monster move that's been. Yeah.
You know what? Actually, let me see if I got pound. Let's get crazy. I mean, if we can do something, let's just get crazy on this. I'm going to go pound JPY. Let me see if this one is better set up right here. So I'm going to tell Cameron to actually go long on pound JPY because I believe pound JPY may be sitting at a very strong resistance level. Right. And then a downside move is expected. And so I'm going to probably tell Cameron to trade the pound JPY, but go long pound JPY.
And then Gary's going to get on the phone, call the BOJ, and say, intervene this week, please.
Well, that's what's happening right here. They've been talking about pushing the interest rate up. So this should be a short-term rally and probably a dip to the downside. So yeah.
Okay. All right. Well, that's good. That's definitely going to be a tough trade for him. What about you, Cameron? What do you think you're going to do?
Let me just take a look here.
Now, did Cameron go in that trade already? Did you go in that trade already?
No, I have not.
Oh, well, okay. he'll put it in.
I'll put it in after I see what I want you to do here. So let me see here. I think the CAD. No, I'm not going to do the CAD. I'm going to do the same thing like you just did. I'm going to take a look at the pound US dollar. And I want you to go ahead and sell on the pound.
I knew he was going to say that. So he's going to make you sell the pound. and you're making them buy the pound yen. Well, that should be very, very interesting. One of you guys is could be right. You know, like in other words, one of you guys could actually benefit from the sabotage trade, depending on how it.
Well, this is my thing right here, Cameron. So the rule is we got to go at 5% risk, right?
Okay.
Right.
So what I'm going to do is, so I want you to place your trade, and I want to explain something afterwards here, just to show you. So 5%, we're going to put a 5% risk on this, right? And
Okay.
so to go put your trade in, put your 5% risk on it, and then I'm going to explain. Once you tell me that you've gone in, I'm going to explain something right here.
You want and what do you want? A 25 pip stop loss or
Whatever you want, but you remember 5% risk is the
okay?
amount, right?
So I can choose. All right.
Yeah. So you want me to sell, right?
Yeah,
Sold.
Yes.
you're selling the pound.
I sold the pound. Just tell me if you entered your trade.
There it is.
Okay. Now, this is the secret right here. This is the part that I've been trying to teach traders what to do. Boris, this is a huge lesson. Everyone must pay attention to this, right?
Yeah.
Cameron, where did you put your entry point?
My entry point.
What is your entry point?
My entry point is at 192.71.
How far is your take profit?
I haven't adjusted my take profit.
Okay.
I was going to see what you want me to do.
Where's your stop loss?
I have about 40 pip stop loss.
Okay. Here's the difference. How many lot sizes did you go in with? 2?
It looks like
2.
Yeah.
So this is what I did. If you take a look at my screen, I've gone in with 1 make lot. I've got a 5,000 pip stop loss, and I'm chasing off the 25. Boom.
The old man.
You gotta know. You see, this is where equity management is key, right? So if I'm gonna lose on this trade, which is gonna be, I'm gonna lose minimal.
Oh man. Yeah, the old man really pulled out the trick. So I'm sorry for you, my friend. Yes. Okay, well, this should be a lot of fun, guys. It's been a blast. I loved having you on here. There's so much to talk about. We didn't even get to viewer questions today, but I got a boogie because I'm going to be doing live scalping at 9:15. If you guys want to join me at BK Traders, guys, it's been an absolute pleasure. I'd love to have you guys both again. This should be an absolutely great challenge, and everybody who's watching, be sure to subscribe to the Trading Battle so that we can bring you more new challenges. We're going to have the Fichardt back, and I wish everybody the best of luck, the best of trading. I'm Boris Schlossberg for the Trading Battle. Over and out. Bye, guys. Thank you so much.
Thank you.